Welcome to the Jamaican Investor. I'm your host, Durain, and thank you for tuning in for another video. I just want to take a quick moment to thank and big up everyone who has been supporting our content so far. I really do appreciate it, and if you like our content, leave a like and subscribe, as it greatly helps the channel. And turn on post notifications so you can be notified the next time we post a video. Also, don't forget to share this video with your friends and family who may also be interested in our content. Remember as well, none of the information in this video should be taken as financial advice and is for information and entertainment purposes only. Please consult a licensed financial advisor before making any decisions on how to manage your money. With that out of the way, let us discuss the topic of today's video: why diversification is important. Well, to understand this, we must first understand what diversification is. Let's consider this example. Say you were a baker and you owned a local bakery in your area, let's call it Bay Bread Bakery, and in this bakery you specialize in producing the finest bread in town. Well, that's great for you, as everyone who loves or demands bread will definitely come to your bakery, and if everything goes well, your bakery will continue to flourish and the demand for your bread will be ever increasing. But there is one problem. You got so good at making bread and perfecting your product, you forgot to consider other baked goods, and due to your specialization in the production of the finest bread in town, you neglected to consider what would happen if people stopped eating bread. Crazy, I know, right? Who could ever think to stop eating bread? Unfortunately for you though, the day came when people grew tired of your bread, and it turns out there are more or other baked goods on the market besides bread. Due to the fact that your sole product has been bread all these years, you take a huge hit and your sales have fallen off a gully, taking your profits and returns with it. In this example then, we get an idea of the complete opposite of what diversification aims to accomplish. Diversification then is the spreading of one's capital and/or resources along various different investments, product types, asset classes, and opportunities to minimize exposure to risk and/or loss and maximize profits. In the case of our example, what should have been done at Bay Bread Bakery to ensure the business was diversified is the development of other product lines outside of bread, such as buns, cupcakes, bullas, and muffins, to name a few. This would have greatly reduced the business's dependence on bread, and in the event bread demand slumps or is no longer as lucrative, then the business has other product lines to fall back on. In investing, the objective is similar. We want to be invested in stocks in different sectors such as renewables, consumer staples, financial services, tourism, and real estate, to name a few, as this will greatly reduce the risk if one sector was to experience negative externalities or slow in the long or short term. Furthermore, we want to invest where possible and reasonable in different companies in the same industry or sector as a form of hedge should one business not pan out. Oftentimes, when one competitor's stock goes up in price, the other may shortly follow or may go in the other direction. As a result, investing in this way can balance your portfolio and provide a buffer against volatility. In addition, it may be wise to consider investing in different asset classes outside of stocks, such as bonds, cryptocurrency, real estate, or other business ventures, as this can further cement the foundation of your portfolio. The stock market, though we may love it to, won't always go up, and while stocks may be in a bear market, other asset classes may potentially be rallying, which may be a great way to hedge your positions against poorly performing stocks. It may also be wise to consider investing in other jurisdictions. Other equity markets, both regionally and internationally, may also provide great opportunity to diversify and spread your risks among various investment streams. This as well may provide the opportunity to invest in different currencies and industries which may not be present in your home country. Now, I know what you may be thinking. Diversification sounds amazing and we can't possibly go wrong with it, right? Well, that's where you'd be wrong. As with anything in investing, there are risks associated with any strategy or methodology. For starters, diversification will spread your capital thin, meaning that though losses will be minimized, profits may also be minimized, as well as all your money won't be allocated to your best performing assets or your winners, and as a result, you have an asset that experiences superb growth, but it has minimal impact on your overall returns. Secondly, diversification can oftentimes lead investors, especially new ones, to invest in industries, asset classes, and investments they are unfamiliar with or do not understand. This is as a result of them believing they need to be invested in everything and the kitchen sink to be diversified. This is untrue, as diversification isn't all-encompassing, but instead should be in investments that you understand and that serve different roles in your portfolio. Lastly, diversification may make your portfolio more risky instead of less risky. This may happen as now, instead of thinking about one investment, you have to consider multiple, which may be very time and resource consuming. Furthermore, these investments may be spread out among different asset classes, jurisdictions, and currencies, which may further complicate things as there are more variables impacting your portfolio. As you can see, diversification can be a useful tool for investing. However, similarly, there can be major drawbacks to it as well, which must be considered before considering if to, how to, and when to diversify your investment portfolio. Once more, thank you so much for sticking around until the end of the video, and I hope this information was useful to you. If you enjoyed our content, leave a like and subscribe for more videos just like this. Also, check us out on our various other social media platforms, which will be linked below. Again, my name was Arain. Stay financially conscious, investors. Goodbye.